Hello traders, Gary Wagner here, just before 10 o'clock in Honolulu, 4 o'clock in New York. It's Tuesday, 24th day of May, 2016, and this is the Daily Report for Gold and Silver. Following data coming out about new housing starts, which were extremely positive, best numbers that they have seen since 2008, we have seen a tremendous spike in U.S. equities markets to the upside and a tremendous sell-off in the precious metals markets, specifically gold, off about $23, currently at $1227.90. That's very, very near the low, $1227.50, high $1252.80. So we are looking at a market that's extremely under pressure today. Let's take a look at silver. Silver also trading lower today, off almost a full percentage point, 1621. That is our current print. The low 1620 and change, so we're just off the low as we are in gold, and the high today 1643. So traders, absolutely no doubt, a tremendous sell-off in the market today, currently trading at around 1227.70. That's in essence the low on the day. Looking at a daily chart, standard candlestick format. Now, one of the things that I did before presenting this morning is I extended a couple of lines. I extended this upper level former resistance that I believe would have become a support line. I've also extended this lower level support line, as you can see. Now, there's no doubt when we take a look at this market that we had an extreme break to the downside, and in terms of whether it is going to cause any kind of a long-term damage on the charts, the answer has to be there's a real good chance that it could. Now, I am still bullish on the market, but I believe that we could in fact have further to go as low as about 1208. As you know, my sense was we had a specific area, we'll pull up another chart in a second, but a specific area of 1244 that I felt was essential that we absolutely hold in the market. We certainly didn't today. In fact, let me go ahead and pull that chart up, which I have just done. And you can absolutely see where the number of 1244 comes in at. Now, this is a basic fib retracement. This is our 23% retracement level, comes in at 1244. And of course, as we talked about yesterday, this retracement is of this long-standing rally beginning at 1045, moving up to about 1306. When we do that, 23% was a critical level to hold. There's another level that we've actually broken below, and it's simply based on this previous high that came in between May and June, approximately a year ago, in the marketplace itself. And we have certainly taken that out. At least for now, we are absolutely trading below that price point. Now, where am I getting this number of 1208, 1206? Well, that's quite simple. That is a 38% retracement of this long fib sequence that we're looking at. We can see that historically we have had it be a level in which the market has found support. And if we continue to slide down, we really only have a couple of areas. Now, one of the areas is exactly where we have kind of terminated these lows right now. And the next area behind that, of course, is about 1217, but that's a very, very minor area. And then our major area of support, should the market continue under pressure, has got to be this area at about 1206. So traders, as we go into the close, we absolutely have gold under some consistent pressure. Weekly charts don't update tick by tick, but 1226.70, that's our current print, putting it down about $24.80. We talked about this a little over the last couple of weeks, and I obviously didn't put the kind of emphasis I could or should have, and that was the identification of this Three River Evening Star. And at this point, it certainly has taken back all of the gains that we got roughly 5 weeks ago. Consider this. We had this tremendous spike, this coming in roughly April 25th, the week of April 25th, as the market comes in and tops out at 1300. The following week, this star right here, let me get my pointer up, but my arrow up. This star right here, of course, had a higher high. This is our 1306, but it opened and closed at roughly the same place. The reason I didn't put as much weight as I should or could have in the market is the following week we did have a red candle, but when we compared the range, meaning the open here and the close here, the bottom of the red candle, to this tremendous upside surge or spike that we had the last week of April, it really couldn't be a total three-river evening star. However, if you recall from Friday's commentary, when we had this candle fully in place, it began to look much more like a three-river evening star. And of course, at this point, we have now broken below those gains, as you can see right in here, where the market really opened at, which is about 1232, 1233, trading up to these highs at about 1300. But we have, at this point, let me draw my arrow across, we've absolutely traded below that, and at this point are going to, it looks like we will close below it. This, of course, is early in the week. Although it's a large candle size, we're still only looking at Tuesday, but we do have Memorial Day weekend coming up, so we'll have to see if that has any kind of effect. For right now, we are going to stand on the sidelines as we have. We are going to take a look to see if this market continues to drop, and if so, my sense is that we are going to look at, as I said, about the 1206 area for some sort of stability. There is a technical, rational reason why this could be the bottom of this recent sell-off, because it has sold to a fib level. However, fundamentals being in play and the anticipation now with the new data coming out on new housing starts is probably that we will see a rate hike. 0.25%, a quarter point is what I'm looking at as a potential, but we might in fact see a rate hike come June. That's becoming more and more a playable hand for the Fed. This has been Gary Wagner, wishing you, as always, good trading. We will be doing a webinar tomorrow that will kind of preempt our daily show. I invite you to sign up for the webinar itself, and hopefully we'll see you then. Have a great day. Bye-bye.